Tonight is our 2020 ER series, presented by Cheddar Flow, a modern options order flow platform. Track and monitor option activity that helps you uncover institutional money flow, all in real time.
Oof, what a heavy Sunday this is. We have just an absolute ton going on in the market today. It is Sunday. We are recording this, and you know what? We kind of got all these plays figured out this week, and then ES Futures decided to kind of drop 30 points down. It kind of puts us a little bit of wrench into things. But, you know, in terms of macro news that we have going on, the major things that we have, you know, besides the obvious one this week, if just every possible big name that's out there reporting earnings this week, we have the Wu-Tang virus coming at you. It's nothing to fuck with, is what the word should be said on this. It keeps getting worse, which can put a little bit of scare into the market. So my thinking with this is that, you know, biotech is going to get a nice little attention towards it, whether it's up or down when it comes to these things. If it continues to scare to grow, we're going to get to that push to see who can come up with it first, vaccine or how to handle it. Obviously, there's the sellers of gas masks that are out there, your 3Ms and a couple other things, or the cloths they put over their face that really don't do much anyway. So in terms of that, but let's dive into the actual things that are going on. Besides the virus that's causing the little market turbulence, we have just, I'm going to read down the list real quick. We have Apple, Pfizer, Lockheed Martin, Starbucks, AMD, 3M, Microsoft, Facebook, MasterCard, AT&T, Boeing, McDonald's, PayPal, Tesla, Amazon, Verizon, you know, Visa, Coca-Cola, just everybody's reporting this week. So, you know what? I said I'm not going to do that many plays, and then, you know, what you got to do is maybe take the strategy that's used for these plays, and then just jump into them and kind of adjust them according to whatever we're going to open up to. Right now, we're futures are at 32.62 in terms of my perspective on these things. I probably need to adjust a couple of these plays just on the fly. So if you want to, be on the lookout for any Twitter fills that I do out there when it comes to this. So the actual fills of these plays. I'm still going to be taking a bias of pop and stalls or pop and drops for anything, just due to market conditions overall. I don't think this is a 2-day pullback on this, and I think you could have a little bit of stalling or a reversal. I don't think this is the big drop that comes that everybody's been saying. So playing those types of strategies, and those types of strategies are your diagonals, your calendars. Technically, if you think it's going to be a big drop, you could do straddle strangles and all those other things. You know, there's just a ton of different ways you can do it, and we try to tackle most of them for here. But you're going to notice that that's the bias in terms of playing just the overall earnings for this season. So let's jump into the first one. So we have Pfizer. Pfizer has an implied move right now. I believe it should be roughly about 41 to 38, I believe, on that. And who knows what happens tomorrow since we're down 30. But the couple plays that I came up with was, this is biotech, this is healthcare field, whatever you want to do. I think that they're going to be seeing a little bit of attention. So whether it gets the pop from earnings or whether it gets the pop from that, I am taking a bullish perspective on that. So we have your 41 debit vert, and I believe this is trading at 31. You might be able to get it cheaper if that's the exact strikes you want, but that's what I was talking about with the adjusting the strikes down to maybe a 39.40, depending on how much we drop, or 39.5, 40.5 type thing on that. But you're looking at a 2-to-1 return on that, a little bit more than 2-to-1, like 2.3 to 1. With a cap out on that on 69. And like I said, you're always going to see the charts pulled up and show you exactly what the play looks like. You're always going to want to follow the blue line. The blue line's the expiration date. The purple line can be adjusted based on whichever model you're using. So it's not completely accurate, but it'll give you a rough idea on the path that it's going to take. The other play that I came up on this was a calendar as well. You're going to be playing the 39.5. And you're going to be playing the 40 put calendar. So it's a diagonal. And when you pull this up, It's going to be a bullish bias on that as well, so it allows some downside, but mainly you don't care if this stalls or it goes up. So you're tackling three of the things that can do. It can either drop, stall, or pop. So technically, if you want to look at it from that basic perspective, 2 out of 3 things, and you're at 66% chance of winning there. So, but another thing that I wanted to talk about when it comes to the diagonal and calendar things, it's okay to set stops on these sell sides for this week. So the January 31st, if these go against you, meaning like if you're running a call on this and a call calendar, call diagonal, and you're selling this week and it goes beyond that, you can put a stop on that and then just instantly jump over to the next week that you have. You will need the buying power in order to be able to buy that back, and it will be at a higher cost. So you do have to consider that. But if it's popping up and it's going to continue to pop up based on what you see, you might as well get out of that other side and leg out accordingly. So keep that in mind. If you can't, then kind of just you have to accept the play as is. The thing that I wanted to talk to you about, if you wanted to play these things according to the IV percentile that it has on here, and you can look on, most brokers have this, it's a 0 to 50 percentile, in these low IV environments where it's not going to be moving. You want to be running debit spreads, calendar spreads, ratio spreads, diagonals. And once that IV kicks up and this thing can get to moving, the 50 to 70th percentile, I believe it is, it's credit spreads, iron condors, broken wing butterflies you're going to be wanting to tackle. And the reason why is because you can find more to collect. Okay, so if it's that in these low moves, no one's really going to be having a bid on these things. No one's going to be really expecting it to pop out. So trying to collect that $5 from playing an iron condor on that is just, it's not good money. So you might as well try to find a way to be directionally biased, but also undirectionally biased, like playing those broken wing butterflies, where you can capture a stall or a move in one direction. And then, if this thing gets really crazy, like I think BYND is an example of one of these, I believe. So don't quote me on this if it's not a 70 to 100 percentile in IV, where you're going to be wanting to run these straddles, strangles, and iron butterflies. Tesla would be another one of these. If you can afford that, you also can just manage these plays too. You don't have to fork over and let it all play out. So, if you only want to run a straddle for one day or strangle for one day on that, plan accordingly. And that's what I've been doing with mine, is active management with these trades on here. So those are what we have for Pfizer. So remember the Wuhan virus that's out there, I'm going to keep saying, I think it's going to be big for anything healthcare related in terms of a rush to find out, who can fix it, who can cure it, who can manage it, who can do anything else like that. So I think that's why healthcare needs to be a focus for the next coming weeks, especially if you see escalation of this. It should be targeted. It should be. Key emphasis on the should. So the next play is SBUX that we have. And I'm going to be going really fast here because we just have an utter ton of plays to go through. So we're looking at a iron condor of a 96, 97.5, 88 put, 88 or 86 put on the other side as well. And when we have that pulled up on here, sorry, I got to do that myself. It's a bit of a broken iron condor here as well, because it's not evened out. So it leaves more to the downside when it comes to this. My stance going into SBUX is, I don't think anybody's actually taking the LK Lucky brand coffee seriously, that they're going to compete with SBUX and it's going to drop them down. But even if it was competing, you're at a 87.50 before you start losing money on this. And you look at 87.50, it's right at the 50-day. It's right at the 200-day. These are investor points where people would love to be picking up there or selling there. So I'm saying it's still bullish. Why not try to at least make sure that you have money picking up along these major investor points where they could be tossing around a bunch of money to make sure that it maintains there so that they can get out, or make sure that they can maintain it so that they can get in from there. So that's why we have it there. And then it has an upside on that as well, all the way up to 96, which is right at basically, we'll call it the congestion zone resistance above, right before all-time highs when it comes to that as well. So I think great play for that. Most likely I'll be putting on that as well. When it comes to that, and that I think that's a 58 credit on that with the max downside of 142. So super solid. And then the other one was a 95-96 diagonal. All right, and this is call side. So call side when it comes to that. So you're going to want to be collecting that 95 on that. So you're expecting a pop necessarily, all right, for this week if you're trying to play this accordingly. Collecting as much as you can off that 95. So you want it to go up but not reach it there all the way. So even 94, 99, great for you. Doesn't matter, whatever, you collect it all. And then you're running a 96 for next week. It pops up from there. But with this diagonal, you're leaving room to the downside so that if you don't actively manage it whatsoever and you just let it play out, and this thing just absolutely, utterly tanks, the most you can make is $10 on that. All right? So you're trying to make sure that these are high probability things no matter what you're making money, and then you could just adjust size accordingly when it comes to that. So those are the two plays. I think that runs you a 10 credit. I believe so on that. Yeah. All right, I'm just looking up the strikes real quick. Sorry about that. When it comes to this, yeah, it's 10 on that. So those are the two plays. Iron Condor, diagonal for SBUX. And then the next one that we have is 3M. So the makers of the face mask that you have that's sold out everywhere. That should be a boost in sale, but I don't know how much of a profit this will be for the company for their face masks that are I believe $10 each or something. I don't know, something. I'm sure they'll provide mask air, but it won't even be reported on this ERE. So they'll just have to play off the scare and tactics of the news itself, and hopefully the company did well. Overall for the chart pattern, a pretty damn good clear inverse head and shoulders and a back test this week on that. So if you're playing it off technicals, look to the upside. It is an inverse head and shoulders with the back test already completed. So this would be a zone that you'd want to pick up if that's what you're playing at. So with that being said, and anybody that's following along with these IV percentiles that they have on here, I think it's 46 on here. So in those, it's the 50 to, we'll just bump it up to 50. So 50, you have your options between the credit spreads, iron condors, broken wing butterflies, debit spreads, calendar spreads, and ratio spreads and diagonals are the optimal things to do. And then you kind of play off your biases when it comes to this as well. So with that being said, I came up with a 87.5/190 call credit vert. All right, so that means that you're allowing it to pop is all the way up, and this is right to that, I believe it's the giant candle that it had right after the huge long downtrend that it had, and it actually pops right back up into resistance on we're not going to call it resistance, out right into a trend line. From the weekly. So two aspects to play off from there. So you want it to just not go above that whatsoever. So when you're loading this up, you're going to be making $41 as long as it stays below 188. All right, so pretty super simple to think about. It's max loss of 209 if this pops up to 190. All right, but look where 190 is on the chart. That's a big move. It's made some big moves off this, a lot of big drops. So kind of let that play into your bias on there, but $41 to collect off of, which is still right within the implied move as well. So something would have to go wrong in order for that to happen as well. The other play is a 182.5 calendar. All right. And then when you have this all pulled up on here, it's a put calendar. So collecting off the put means that you want it to pop anywhere above 82.51. That's it. That's all it takes. All right. So if it goes up above, we want to collect all that. And then if you were to leg out of that and buy it back after you at one or whatever you're collecting off, then you want it to drop back down the next week, or you can just let this ride out. But the wide range on this calendar, and the reason why I wanted to run it, was you're looking at a 170, all right, for this, and 195, $25 range on this. And when you pull that up, the 170 is right within the implied move, and the 195 is right at that trend line again, a little bit above it. So in case this thing really gets to moving and you're playing it off the technicals and you're playing it off the scares of the mask that maybe that boosts sales, and how are industrials doing? Are they being affected by any macro news? And the macro side of things is you kind of have to play off technicals, because technicals kind of show the investor mentality of things. So somebody's bullish on it if an inverse head and shoulders was completed and a back test was completed as well. So those are the two plays on why I wanted them. All play within that implied move and kind of try to capture that as well. The other one that I am just running through right now is AMD. All right, this one was hard. It was hard to come up with a play that I just felt really comfortable running and felt like, yep, this will be good, without just fully expecting to kind of like be willing to accept something that kind of hit really hard if it did, because it's just a volatile stock in general. So when it comes to this, I came up with a broken wing butterfly to the downside, which means I wanted it to pop. I wanted it to stall, number one, but I also left a little bit of room where it could pop as well. It's currently trading at 50. All right, we'll just call it 50. It's actually 50.35, but we'll say 50. All right, so this can pop all the way up to 53.50 where I'm making money, and then it can do anything below that and I'm making money. So if it does anything below that, all right, I can have a max of 141, or if it goes below right where it's at 50, I'm making 48. So a lot of room, a lot of options to play with. But the downside is if this thing gets to pop into the upside, which could very well happen, because that's just how crazy these semiconductor stocks can just move. Look at Intel. I mean, like, Intel can get to moving, and like that play last week could have burned. So it's 150 to the downside. All right, so let that play into your bias, and like that's why I wanted a little bit of pop to the upside or a stall or downside, and that's a 48 credit on that. So obviously you're going to need 150 in collateral in order to cover any max losses, and then you put that on, and it's a 51, 52, 55 call broken wing butterfly. All right, I think it's a great play. I'm probably going to be putting that one on as well, but the ones that I kind of really wanted to play, just because you can kind of you can have fun with it, was Apple. And that's actually just happens to be our next play. And obviously we kind of already know what Apple does and has been doing for the past couple months when it comes to this. Is just this huge run up. Now, what happens if it's just a huge continuation because it has good news, and you have to play off that, and you have to have that mindset. So how do I do that? And that's when I came up with a 337.5, 340 call credit vert spread. It's currently trading at 318. So anything below 337, I'm going to be making $41 off this. All right. Now you're gonna say that's not a lot. You're right, it isn't. But you know what? This thing could do anything right now. So why not at least try to make it somewhat plausible? Something that I can at least walk away with something and say, yeah, I played it, besides just getting some deep out the money calls or trying to pinpoint where this is actually going to land with a condor or a butterfly, or shelling out a ton of money for a straddle strangle. So that's why I went with this one for this one. I do have another one, but then I'll explain that one later. But so anything under 337.50 and down, I'll be making 41 with a max loss on this one at 209. So 209 is a lot. Ratio isn't good, but you're never going to have a great ratio when it comes to selling call credit vert spreads. All right, it's just never going to happen. You're trying to create a high probability trade, unless you're taking like at the money or just widening out your strikes. When it comes to this, it's just no bueno. It's not good. The other one is an iron condor, and this is going to be stupid wide, and that's why I want to say so. Let me load that up real quick. Here we go. So it is what we're going to be doing is a 342.5, 345 call for the call side, and then a 300, 297.5 for the put side on that. So you have all the way down to 299, all the way up to 343. You're going to be collecting 63 cents off this with a max downside of 182. Super wide when it comes to this, and I think 300 is going to be a base that people try to maintain when it comes to Apple, unless the market is just completely dumping and falling. You know, I don't think people want to see this all the way down to the 50-day, and maybe you can maneuver your condor all the way down there and kind of trying to trap it at maybe a 330 down to like 290 to trap it for this iron condor and play off that. But you're not going to collect much off that. So I wanted to at least get 60 off of it with, 3 times that amount for a downside in 180. So roll with that. And again, that's a 342.5, 345 call side with a 300 to 297.5 for the put side for 68. The next one we have is Microsoft. And I just feel like I'm talking up a storm as fast as possible because we still have 4 more plays when it comes to this. Clearly, I'm not going to be able to take every single play, so I hope that's understandable as well. But we have the Iron Condor is always the perfect thing to do when it comes to these, especially if you can accept what it is, and it's just the basic way to collect, especially off these moves. These environments where it could get to moving based off of something that 50 to 70th percentile or the 0 to 50th percentile, and you're okay with accepting what you're going to get off that. So it's a 170, 172 call side with a 157.5 to 155 on the put side. And you're collecting 85 cents off that, which I was like super hype about when it came to this because it's trading at 165 right now. So 165 all the way down to 155, I make money, or popped up all the way to 171. So $6 on there, plays within the implied move itself. And Microsoft isn't known to make these huge moves on ER either. Like, they're not known to tank or just absolutely utterly pop. So to collect that and being able to get 85 off that, I feel good about it. It's a big range, and it plays right off the 50-day when it comes to this. So this could tank all the way down to the 50-day, and someone's going to try to pick it up there. So you could get a little bit of pop right back above, and you just got to get it right back above 156, and I think that's great. So that's a great play. That is one I'm 100% going to be making sure I have money for to put that on. And then the other one was a 170, 172 credit call vert. Means that you want it to not exceed that 170 mark, and you don't care what it does beyond that. It's ambitious. It is playing off of the current euphoric run-up of a pullback. Most likely you're going to want to just collect whatever gets down from the IV crush on all this, and then just kind of dip out and not wait till the end of that, and kind of just move your money on to the next play this week, which you're probably going to have to do because there's just so many. But that's for 54. $54 you collect as long as it stays under 170. Excuse me, it should be 170.50. Yeah, 170.50 with a max downside of 200. All right. So those are the 2 plays. Iron Condor, selling call credit vert spreads, especially in these huge run-ups. I mean, sure, you can take your chance. You can buy some put verts when it comes to this. You can buy some straddles and hope that it gets to moving or it doesn't just stall out because people are battling with the sell-off and while they're buying it up at the same time. So I just think call credit vert spreads when you're feeling like the euphoric run-up is a little overdone and it needs to slow down. That way you don't care if it moves up a little bit higher, stalls, or drops. All right, so the other one. Facebook. Still another one of those like huge run-ups. Deserves a kind of stall pullback of any sort, just like any single name that's out there. One that I came up with is a broken wing butterfly. Exactly what I was telling you about. We're hoping you can get a little bit of pop to the upside where it stalls out, but you make money no matter what to the downside. All right, so that's why you want to run these biased broken wing plays, whether it's if you think it's going to do that or the opposite way and it's going to go up, but you want to just make money, just make sure it goes up no matter what. So when it does this, I believe we have, let's see, we have the 225 calls with the 227.5 call for the middle strike and the 230 to create this broken wing butterfly for 52 credit. The downside is 200. All right. And the downside, you start to lose money at 230, currently trading at 217. All right. 230 is a nice pop on that, a really, really nice pop on that. So you still make money as long as so anything that happens between 230 and under, you're making money. All right. So the max you can make on this is 300, which is huge. With anything below 225, your lowest strike is where that begins to cap out at $50. but you need to be able to cover that $200 loss, so that'll be a collateral on your play. So you need to have $200 in order to put this play on. All right, and that's for Facebook. That's going to be the only one for Facebook. The other one, so here's one I kept on flirting with, is that BA Boeing is, I just couldn't find anything. Too expensive to run a straddle. I don't want to do that. All right, too risky to run a call credit vert and collect money off that, and just not enough money. Iron Condor is too wild. This thing could pop drop and just hit my parameters of that condor and just give me my max loss right away. So I thought about it for a second. I was like, what type of environment would work best for this? And so I came up with, you're going to be selling a butterfly. Now, when you think about a typical butterfly, it's a pinning play. Or buying, it's typically a pinning play. You think it's going to be pinned here, and you just collect all that premium from that pinning. Now, if you sell that, and you flip that butterfly upside down, as long as it doesn't stay within that pinning, you're making money. And what a better play than Boeing, where it should just move. It should move in either direction. It always will. So as long as it stays below 305 and above 315, you'll be making $44. But if for some reason this sucker stalls out on 310, you are losing $430. But what are the chances that it stalls out for the entire week at 310? And just look at anything where it stalls. Like last time it stalled was 2 weeks ago. All right, and then it's just basically hasn't stalled in a long time. All right, you just keep working it back, and especially during ER plays. How about that? So last ER, you had the big drop led to then a pop back up, and then a little bit of stalling, and then it just continued ramped. And then last time ER, a complete drop and just fade all the way down. And then the last ER prior to that, it was a stalled and fade down. So just, I think this will play, if you're okay with collecting $44 off this, do it, get to it. All right, and then the other one is MasterCard, MA. And we have another Iron Condor when it comes to this, as always, for something that kind of really doesn't move at all. I mean, it does, but it doesn't when it has these ER things. A lot of congestion areas, a lot of fades down. So as long as you get it within these moves, it should be easy pickings, unless this really tanked and you have American Express to kind of look at for a little gauge of what to expect. And it was a pop and a fade. So how do we work into that? We are going with the 337.50 to the 340s on the call side, and 310 to the 307 put side. All right, and that's going to be a 62 credit, which is going to make sure that you make that 62 credit as long as it's above 310 and below 340. The implied move is to 335 and to 310. So it plays perfectly within that. You're collecting 62, you get out, and you're losing 188 if it just massively explodes or massively dumps. But look where it's at. Look where it's playing off of. You know, like it's right in the middle. It's right where you want it. Allows it to play. You can collect something the next day, and you don't have to let it all play out if you feel there's some risk out there. I had that same risk when I think it was, I can't even remember what was last week anymore. But one of my plays was it was Netflix. Netflix was the one. I said, like, oh my gosh, when it had that massive pop back up, I said, if this gets to 362.50, I'm gonna start losing money on this play that I was already at max for. And then I let it hopefully came back down, but you don't have to hold this all the way to expiration. I mean, you can cut it off and grab 80%, 70%. I don't think this has to be held. Last one, or not last one, sorry. We have two more after this, is AT&T Mobile. No, excuse me, just AT&T, whatever, sorry. So we have AT&T, which is going to be the it's going to be the 3940 debit call vert. And when you have this debit call vert, Remember, it's one directional bias. You can only make money if it goes past your strikes. But I am playing a bullish side of this just because I couldn't think of any. It's just too low environment. You can't sell condors on this. You can't really collect on what these plays are. Calendars they're not fun. It's nothing to do as well with that. So running just a simple fun one, call debit verts, and max is 70 on that. If it reaches 40 and you lose 30 if it drops anything below 39, which is the strike that you do. So 39, 40, debit call vert. MCD, McDonald's. You can look at this from a perspective of, does the virus play into this at all? All right, it's on a run up. It got moving big time. So if the virus does play back into this, maybe it pulls back some. If it didn't have that run up, what was the run up for? If it wasn't for, it's something going well for it. So play off of just anything you know about the company that can help you create a slight bias or perception towards this. And the other one was a 215 calendar on this. And I believe that this was a put calendar. So you always want it to go about 215.01 is all you want out of that. It can close right at there and you collect everything from that put. All right. And then you can carry that put into the next week if you want, if you think that it's going to fade off that from market conditions. Maybe market exploded again. Now it's too high. Now it needs to come down. Now you're rolling into next week with a 215 put after it stalled off at like 216. So you could still make money regardless. I feel like everybody knows how to play a calendar and diagonals at this point after I've explained it. So I'm going to try to step away from those in the future and go from there. The last one is the YOLO of the year, essentially. There's a lot of different ways that you can play Tesla. All right. I think a lot of people are going to be selling call credit spreads on this. It can go against them very hard, very fast. I think people really need to be cautious when taking this play, but it leaves upside, it leaves stalling, and it leaves it to drop because this run-up doesn't fit the Tesla Q mentality that people had. So take that into consideration. The play is so it is a call credit vert spread, which means you're going to be selling the 610 call. All right, so it has to just make sure that it stays below 610 and you're buying the 612.50s. You're going to be making $81 as long as it doesn't go above that. If it fails it, you're going to be losing $165. So pretty decent return, actually. And especially if you think, okay, well, maybe they can squeeze just a little bit more out of this run up. All right, so that's perfect. It fits that whole thing perfectly. Squeeze a little bit more out of there, but then it's going to fall, or then it's going to stall. Great, perfect. That's what you can do. Do not run iron condors here unless they are ungodly wide. Just ungodly wide. It is going to be so volatile. It's in that 70 to 100 percentile where you will need to be running straddles if you can afford them, strangles if you can afford them. Maybe a biased broken wing butterfly where you think it could hit 600, but it's not going to go past 600, but you're going to be making money regardless if it goes down on those types of plays. Just be careful about what you do. Do not make sure everything is capped. I've seen so many people that can blow up their whole accounts on these types of plays by just selling strangles for some reason. Just know your strategies really when it comes to this. So that is a lot of plays. My mouth is exhausted running through all these things, and we still have so many more to do. I didn't do PayPal. I didn't do Novartis. I didn't do Lockheed Martin. And I didn't do a line. It was a premium issue, a little bit of liquidity. If I needed to sell something or get back into something, the spreads are too wide, which most likely means that I'm going to be frustrated trying to get in and out of these plays. So I kind of didn't, and that's not to say that all the other ones I said were perfect, but you will have an easier time than I think getting into these than the other ones. Thursday hits. We're going to do another midweek video of Amazon, Visa, Verizon, Coca-Cola. Lilly, UPS, Altria, defense. We'll just call it defense with IP, the one that just had that huge, it's the gap up island reversal essentially. So it's bullish by nature, just by the chart pattern. But people say otherwise. So maybe we'll find something that can fit that play. And then we have oil. Oil is going to be like oil companies and plays, and Caterpillar. So a big week. A lot of things are said. My mouth is running a mile a minute. But I'm excited to see how these play out. We ended last week at 75%. Other week was 60-something%. Both are positive weeks. I'm going to try to keep it up. We're going to try to do it. We're going to give you plays that are higher probabilities than simply just grabbing a call and a put and saying YOLO and seeing what happens. And yeah, you may make more money doing that than what we're doing, but who cares? I would want to consistently make money that could actually happen and be repeated. So we will see you guys on Tuesdays when I'll be filming for the next video, and we'll see how that pans out and where it goes and what market conditions have changed. Maybe the Wuhan virus has mutated again and we got this huge sell-off that progresses. So we will see you guys then. Good night, and I'll see you later.